Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you very much for joining me. The Australian dollar's bearish sentiment continues after yesterday's data. The Australian Bureau of Statistics, CABS, released the Australian Consumer Price Index, CPI, for June quarter inflation, which narrowly beat expectations of 0.5% and rose by 0.6%, which may possibly postpone a third consecutive rate cut this month. Although the data is not enough to ward off a further reduction by the end of the year, it's still anticipated the RBA will be cutting rates at least one more time. That would see the rate down to 0.75, although there is some economists calling 0.50 or 0.5%. The data from China also gave some impact on the Australian dollar, after the manufacturing PMI for yesterday came in at 49.7, contracting for the third straight month in a row. The factory activity contracted for 7 months in the last 9, and economists were expecting the PMI to come in at 49.6 as compared to 49.4 in June. Looking at the technical outlook, with the support at 68.45 reached, with the low being now of 68.27, does give us some concern that we're looking at the level of 68.20. A break beneath there would give further scope to the downside, as we are trending with an ADX, but we are oversold, but the MACD is still very heavily bearish. Therefore, we could see a move towards 67.5 beneath 68.20. So do keep an eye on that. If you are trading from the short side, continue to lower your stops. As you can see now, we're getting awfully oversold and there's been no turnaround since the level of 70.80. Well, the euro, for the first time since May 2017, has taken out the 111 level and now looking lower, with the support seen at 110.0520. Early this morning, the US Federal Reserve cut its official cash rate for the first time since 2008. By a quarter of base point or 25 basis points, which was expected by nearly everyone. This, on the other hand, has now lowered the lending rate to 2% to 2.25%. However, after the rate decision, it was from Fed chairman at the press conference that sent markets on a wild roller coaster after Powell sent a confusing message as to what will happen next. The market's initial reaction to the FOMC policy announcement was mild. However, when Powell commented that this cut was not the start of a lengthy cutting cycle, the market suffered its worst negative reversal of the year. The global markets have been anticipating several cuts over the next few months, and this seemed somewhat tilted to the Fed's plans, as the statement came across a little more neutral than dovish. But during the press conference, Powell did try and clarify this by saying, "Let me be clear, what I said was it's not the beginning of a long series of rate cuts." But Powell did say, "I didn't say it's just one or anything like that. When you think about rate cutting cycles, you go on for a long time. The committee is not seeing that and not seeing us in that place." So looking at the technicals, there is room to go to 110.0520, but beneath there does give some concern. We could be looking down towards 108.45. Resistance seen around 110.95 to 111.15. Well, dollar yen has now pushed through the 109 level this morning and now looking up towards the level of 109.50. I'm looking to get short around this region. I do believe the market is going to struggle to sustain, and one of these candles like this that we saw back in May can eventuate from 109.50. If so, then we are looking towards the lower side of the range of around 108.70, 108.20 to 107.15 region. Looking at the pound, well, the market has continued to move lower, and as you can see, the fact is the ADX is overheating as it gets to the high close to 50. But the RSI and the MACD is still very much negative when we look at the weeklies, and therefore could see further risk. Now, a break beneath 120.50 does give some concern that we could be looking down towards 119, but do be on your guard. We are very oversold. and a rebound could be just around the corner. So continue to lower your stop losses. Until we get a break though of around 123.40.80, then let's see if the market can continue to decline. My risk at the moment was the fact that we see a turnaround in gold. While it rejected the level, which was at 1,433, that being the cap for some time now, for at least 6 or 7 to 8 days now. At this moment, the market's still looking down towards the region of 1,395, and be aware that I do expect to see a rebound from there and look back towards the top side, somewhere around 1,412 to 18. Wrapping up with oil, the market slipped slightly overnight and falls away from that level of 58. I'm still bullish as long as we don't go beneath the level of 56.80. If so, then I'm looking for a further scope to the upside, back towards 58, 59 and 60. Well, that wraps up for today. Thank you very much for joining me. And as always, look out for the Intraday report and I hope you enjoy the rest of the day.